Good morning. Good morning. What's going on, everyone? It's Monday. It's a new week. I gotta say, coming off of last week's little debacle, that volatility, a hell of a damn rally that we've had. It's a nice little morning dip that we're getting this morning, but nonetheless, China is mooning. That is correct, Lobo. I mean, I don't know if you guys actually caught that newsletter play from last week, but my goodness, that was one hell of a move off of that newsletter. I think if I remember, I wrote Baba when it was roughly around $78 from last weekend. It actually dipped down to 76 and it's now pushing over $93. That was one hell of a goddamn play off of the newsletter from Baba. I do believe that there is one more play like that similar in the newsletter for this coming week. So I will say those of you that are actually subscribed to the newsletter, I would definitely say take a look at the newsletter. I'm pretty sure you can actually tell the play with the bull flag that is actually setting up to look like a monster move. And I know that Avery actually was the first one that commented and said that looks like a banger, pretty much setting up. So keep an eye on that one. I will definitely say that I'm not going to tell you what ticker it is. I will just pretty much direct you to the newsletter, and definitely read my section and my newsletter plays. All right. But by the way, good morning, Jose, Will, Manoj, Lobo, Cass, Jose. Good morning, guys. Good morning. It is pretty much a nice little red morning that we are setting up now. Just to paint you a picture of what I'm basically looking at from a broader market landscape, right? I'm actually looking for pretty much a bigger pullback here. Obviously, right now we're already down what near a percent or so, 3/4 of a percent. I'm gonna look for particularly for SPY to break down below that 400, that mental $400 mark, but potentially down towards three. I have looking towards about 387, 390 is going to be potentially my ultimate buy the dip type of spot where I'm gonna look to pretty much accumulate on the different names across the board. All right, and hopefully that would set us up for the next pretty much leg up on this overall bear market rally. So that's what I'm pretty much gearing towards. Obviously, the level to the downside is going to pretty much kind of be a little bit more of a feel to see how much we escalate to the downside. But that's just the game plan right now going into the week. We'll have to see, of course. We do have data coming out this morning. We had the PMI ISM data coming out roughly around 10 a.m. So, to also give you pretty much a game plan for the day ahead, I would definitely suggest, usually we say wait for the opening range to establish. I would primarily say wait until we get data at 10 o'clock this morning, wait until that 30 minutes is up, and then look to see how the data pretty much reacts towards the markets. I do believe that it is favorable to the downside. So if I were to say more so, if you're looking to get a lotto into the data, yeah, I would likely lotto towards the downside in which you get a put entry, right? Do I suggest you getting a lotto ahead of the data? No, I think you'll actually have a better setup, a better opportunity on some kind of more so of an immediate breakdown and a retest of some type of resistance, and then you look for that short opportunity. That would be more the discipline side of me, saying that just wait for the data, wait for the breakdown to occur, watch for a retest, and then look for your entry and your puts. That's more so my safe conservative side, right? But those of you that are risk takers, I would likely look for a put lotto ahead of the data, and then pretty much kind of buy your luck, but then also look to pretty much also exit your position if shit goes sideways on that pretty much, especially those of you that are going into 0 days. All right. So that's pretty much looking at in terms of levels, like I was just mentioning, in terms of what I'm looking at. I'm gonna look to pretty much break down off of this weekly 50-day EMA below 403.70, as we're just roughly right above it. And then escalation to the downside, I'm going to look to start to break down towards 397, 394, and then ultimately my little type of buy the dip type of zone, 387, 390. That's where I'm going to particularly look to start accumulating on individual names and then also on SPY, in which I would more so favor going out towards next week expiration or 2 weeks expiration at the pretty much being a safe conservative side for potential swing opportunity. All right. So ideally, I wouldn't try to force it going into a weekly to play the reversal back to the upside, because then the fact is that maybe your premiums end up getting eaten up by Thursday that we're expecting the reversal back to the upside, and now you're left holding that bag, wishing for a prayer, and that the market rallies and goes vertical on Friday. So don't try to go into a weekly, particularly is what I would say. I would say more so try to go out towards next week expiration, unless those of you are just pretty much scalping, then yeah, obviously you're going same week expiration, looking for that little bit of a scalp opportunity. All right. But just catching up, Jose, can I look at ZS? Definitely take a look at it for you. Let's see what's going on with ZS. Isn't that Zscaler? I think it actually broke down from last week, if I'm not mistaken. No, wrong ticker. I was actually thinking of CrowdStrike. Nice little push that you've had thus far, I will say. In terms of a strong level of support, I do believe that you have a strong level of support between this 85, 86 mark. So I will say you roughly have about another $3 to the downside here potentially today. So watch to see how this reacts down towards that weekly 200-day EMA, sitting at 85.64. Otherwise, if you break down below 85.64, I do believe this breaks down towards 82 and a quarter, and that may end up ultimately being your ultimate buy the dip type of spot there for a bounce. And that's also going to be reflection as well, testing your 20-day EMA off of the weekly chart. And I actually apologize because I actually put in ZD and that's not even ZS. Haha, that's funny. Okay, so this is one that actually broke down like credit strike. My bad. This is an ugly looking chart, I'm not gonna lie. Alright, this definitely paints a different picture for me. Because what I actually see here on Zscaler is a weekly head and shoulders. I do not like that at all. That's a disgusting looking chart. I'm not gonna lie to you at all. I wouldn't say that I want any part in this chart because it looks absolutely disgusting for Zscaler right now. And so I'm actually just drawing out that weekly head and shoulders so you can actually take a look at it if I try and drop it down. But if you actually see that right now, I just pretty much drew that out pretty beautifully for you with a weekly head and shoulders. Now, if you're looking for maybe the quick little buck out of this, I would say you can likely take the your resistance if and when we end up reversing. You can see this potentially push back up towards 150, 151 is more so what I would say to pretty much retest your overhead resistance. But I would likely favor the fact that you're going to end up testing down towards 121 first, in which that's going to be about another $7 downside, as I'm pretty much setting the table here for continuation on this little gap down that we had this morning. So I would watch 121 to the downside here. That is particularly the downside risk that I'm looking at for your next level of major support. Look to buy it off of 121 if you're trying to play the reversal. And then we could potentially see this retrace back up towards that 150, 151 mark once we start to see the next leg up on the broader market. But over and all, I don't believe that there's much upside beyond that 150 mark. But I do believe that's pretty much more than enough for what you're potentially looking at to make bank off of this. If you're looking for that 121 up towards 115, which you likely, I would say, go out towards what 2 3 weeks. If you're looking for the larger degree move, the larger degree swing, for potentially what is that, an air 20 $30 move to the upside within this next leg of the upside in the broader market. All right, but 121, that's the floor I'm looking at. That's where I would say you look to pretty much once it gets down to that 121, look to see how the reaction is and look to maybe nibble at an entry for the upside for the reversal. All right. Hella damn tickers. Let's see what's going on. What else? MDB. Let's see what's going on with MDB. Another one with the weekly head and shoulders action. You can see the left shoulder, the head, the right. You've already seen the bleed out. In terms of support level, I would watch this down towards 141 half for your floor. So 141 half, that's a spot that I would keep a very keen watch on. If it breaks below 141 half, then I do believe that you have much greater downside risk, in which that's going to take it down to 122. Otherwise, if you could particularly hold right around that 141 level, I do believe that you would look for the reversal, and you could particularly take this back up towards 167 to the upside. All right. But yeah, that 141 spot to the downside, I believe you watch the floor there and look to see how that particularly reacts at that 141 spot, in which that's about another $14 to the downside as we're setting the table for more further downside risk in the broader market. All right. Let's see what else going down the list right quick. Christian DOCU leaps. Um, I'm not a favor of DOCU. I'm not gonna lie. I don't believe in pretty much looking at leaps to DOCU. I believe that pretty much the overall COVID type of rally that we had in DOCU has actually killed the entire type of sentiment in the stock, being at it was the growth stock as a growth stock with pretty much a high multiple. during the COVID rally, yeah, that is no more. The pretty much the growth on this is actually pretty much relatively dead. In terms of overall upside, if I were to say if there was any kind of upside left in the stock, I believe that you're basically looking towards 65, 66, in which you're basically testing, which was I want to say of a retest from when you before you started that overall COVID rally, and yet again, that's 65, 66 is where you're looking at, in which that's potentially about another that's about $20 upside within whatever given time period going into next year. Do I believe that it's worth the risk to reward in terms of trying to get into a leap? If I'm being honest with you, no. I think there's better opportunities in other areas, other takers to get a leap entry on than something that's pretty much dead and which, as a growth stocks, it does not have much upside left for it in the tank. Being that it's not something like how Moderna. Give an example, right? Moderna was pretty much a rapid growth stock, but that's actually came alive. You're pretty much looking at a name like a Zoom. That was actually another COVID stock, but that's actually been dead in the water. No one's actually talked about Zoom in probably months now, right? There's nothing there that says that I want to go buy that unless I know that COVID is particularly coming back because as a growth story, it's dead. It's not coming back, and there's nothing I want to do with it. So that's pretty much just my sentiment. But yeah, a Lobo shop. Let's take a peep at shop. Let's see what's going on with shop. Shop's actually not looking that bad. I will say I would look down towards support right around this 39.87 mark is what I'm looking at. 39.87. Watch for that support test at 39.87. If 39.87 doesn't hold on that, then 39.5 is going to end up being a full-on retrace to where we broke out from. So 39.87 is your first level support. Then you watch for 36.5 to retrace this entire little leg up in which we had that breakout occur from last week's pretty much overall move. So 39.87, then you're watching 36.5. Otherwise, in terms of a breakout for continuation back to the upside, I would watch to see this break back above 47, and then you're gonna end up leading back towards a larger degree move, in which that could take you back up towards 54. All right. So that's pretty much just the key levels. 39.87 though, that's the first key level to watch for the downside, and then 36.5 is where you're gonna retrace all of last week's move. All right. Let's see what else so I can kind of get through these before the opening bell here. Wayne, you're talking about Apple puts. Let's see what's going on with Apple puts. I do have a few key levels pretty much marked up on Apple here. Right now we're actually not even down that much on Apple. I think compared to like a Tesla that's down like about $7 this morning, Apple does not look particularly bad. Now, I would look for a short opportunity below 146.33. That's the key level that I have for support test. That's where I believe below 146.33, it is going to accelerate to the downside. Otherwise, if you end up bouncing off of 146.33, you may end up getting a little bit stuck in a little bit of a sideways action chop zone as other names are accelerating to the downside, aka like I just mentioned, Tesla already down $7. That could easily be down double digits by the opening bell, right? But below 146.33, I'm going to watch for what I particularly have as our next pretty much support zone. It's going to be between 143.96 to 144.80. That's the zone that I'm watching here for escalation below on the break below 146.33. Otherwise, continuation below 144.80. I'm looking for pretty much confluence here with the 100-day EMA off of the weekly, and that's pointing down towards 142 on escalation to the downside, which from current levels, that overall move to the downside is pretty much projected to be about a $5 move to the downside. All right. So that's what I'm looking for. The only thing I would caution again, don't try to get stuck on a chop zone. If this does not break down below 146.33, and maybe you have other names within tech pretty much breaking down, like a Microsoft, like a Tesla leading us to the downside, don't get stuck in a chop if this ends up holding 146.33 on Apple. That would be my caution. And I usually always pretty much emphasize there's always rotation within a sector. And that's particularly what we've seen between relative strength to relative weakness between Apple, Microsoft, and Tesla. So definitely keep an eye on that. All right. As I actually just mentioned about Tesla real quick, because I do see that I kind of wrapped up a lot of the names. AA, by the way, what's going on? Jose, you're welcome. Alobo, you're welcome. Hopefully, I was able to help you guys out with those tickers. As I get into Tesla here, I will say I'm actually kind of fond of this little bit of a setup here that I actually kind of starting to distinguish on Tesla, but it does have a nice little descending broadening wedge. Now, those of you that know, that is one of my favorite patterns, right? And the biggest key part is identifying the trendline support, in which you have three endpoints that meet that trendline support, and you have a wall declining trendline resistance. So the setup is pretty much looking beautiful for Tesla as of right now. But the bigger key thing is going to be once we start to see the reversal of this overall downtrend to begin the week here. I want to see how that reversal takes place and if we can break over this basically last week high to make a push towards that downtrend resistance. And that's going to set us up for a beautiful rally over that 200 mark on Tesla. But a little premature right now is what I will say. It's just something to keep an eye on going into the end of the week. I'm sure I'll probably touch bases on it later on in the week. But in terms of support levels, real quick to outline that, I am watching 186.76. Below 186.76, that is likely going to set us up for a double digit loss on the day here today, and that'll take us down to 182.50. And if we really start to roll over below 182.50, then that's when things are rather going to get more ugly, and it's likely going to be more so due to data that's going to come out at 10 o'clock this morning, that PMI ISM data, and this could very well escalate down towards 173, and that's going to be a disgusting type of price action. That's going to lead to a bigger, more disgusting type of broad market sell-off. All right, so that's what I will say. I just want to kind of outline the bigger time frame, larger degree setup I'm watching here to play out towards maybe in the middle of the week, end of the week here, once we start to stage a reversal in the broader market. All right, so that's something I'll keep an eye on. Like El Lobo pretty much kicked off, China's actually booming. Baba was a hell of a banger. That was a beautiful little play last week. Like I mentioned, I ended up writing about this when it was down towards around 75, 76, and that was already about a near $20 move from when I wrote on it on the newsletter last week. But we are pushing. We're looking to actually make a continuation towards the daily 200 EMA towards 97.59, where I actually have resistance sitting at 96.17. And of course, as you know, you can basically easily wick into that EMA rather quickly and then see the regression. So 96.17 is my resistance, but that is confluence with the daily 200 EMA at 97.59 on BABA. And so that still leaves you with about a near, what, $4, $5 move to the upside potentially on BABA. So I would keep an eye, but ultimately I would preferably like to see if we get a pullback after my prior resistance at 88 half. Ideally, I would look to see if we can get a dip back down to 88 half. But the fact that China's just going vertical, Baba's going vertical, I don't necessarily expect us to get that much of a steep pullback. So if you're looking for a pullback, you're looking for a nice little entry off of Baba here, I would look down towards 91.87. If you get that kind of pullback, I believe that's a decent enough pullback to get an entry. But 91.87, look to see if that's a buy the dip type of entry, and you take that up towards 96, 97 for that overall continuation on this move. All right. So that's definitely one that I will keep an eye on. Looking at other sectors real quick before we get the opening bell here, I'm still watching the XLE as we have that nice little wedge building up here. We are pushing into the resistance of the wedge as we have a nice little gap up, about a 1% gap up. I'm going to look to see if there's a short opportunity towards that 92 mark. My zone that I'm watching for the put entry is between 91.87 to 92.09. Look for that put entry there potentially, and then watch for the breakdown back below the 20 EMA, and that'll take us back down below 91 and potentially support off of the wedge is 89 half. And if the risk reward that I'm actually looking at is greater to the downside, I'm looking for the breakdown below 89, targeting 88, and then potentially 84.76 on escalation. All right, but that's pretty much a wrap. Hopefully, I was able to pretty much give you guys a pretty good outlook on some different tickers, broader market. But bigger thing, wait for 10 o'clock, the next 30 minutes here for our economic data to come out. And then hopefully that trend will establish for us. All right. Other than that, you guys all have a great day. Appreciate you guys joining me as always. But later.